Oh boy, here we go. Back to the action here once again. Hope you guys had a fantastic day, but it's about that time of day again, isn't it? Time to get back to work. Wednesday evening, the 9th day of February 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, if you're here for the first time tonight, great to have you with me. My job tonight is to help us find the best trades, setting up for Thursday, not just any Thursday, big news, inflation number coming out on Thursday morning. I got a great video in store for you guys tonight. Charts are all ready in the background. As you can see, got the oil, got the Nasdaq, got the S&P here. Glad to see you are here, locked and loaded and ready to go for Thursday's trading session. Got a bunch of great trades on my radar tonight. We got everything looking pretty bullish right now, but I'll tell you that could definitely change. As I mentioned before, we got some of the biggest news, possibly the biggest news of the whole month coming early tomorrow. So I'm going to break down my trading plan for tomorrow. I'm anticipating maybe some ranges, maybe some strong trends, maybe some big reversals. So I want to make sure we are ready for whatever this big news report comes at us tomorrow, whatever the markets give us on Thursday. Not to worry, I'm going to break down all my favorite trades in tonight's video. And of course, we'll talk about some stuff to avoid to keep yourself out of trouble in case you're trading on your own out there. Now, of course, as always, before we jump into the video tonight, though, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you have any questions, drop those questions in the comments section. I'd love to answer any questions that you might have. And if you enjoy this video every evening, hit that like button for me if you guys enjoy it as much as I enjoy making it for you guys. But enough of the intro, though. Time is ticking. How are we going to make our money on Thursday? Thursday. Let's get into these charts here. Now, everything is pretty bullish going into tomorrow, right? Thursday's trading session. S&P's very bullish. Nasdaq's very bullish. And oil is, it's a little bit bullish. You'll see why I say that here in a moment. We are overall bearish on the oil, but you can see there's a little bit of rotation, right, coming off the low of that trading range. Now, of course, bull markets, I'd love to buy some pullbacks, but, like I said in the introduction, we have some big news tomorrow. So, I really want to make sure tonight that we kind of go over all the different, again, we want to be ready for some strong trends tomorrow, maybe some reversals tomorrow, and definitely some ranges tomorrow. So we're going to break down all my entire game plan tonight, so you are ready, whether you're trading with us tomorrow morning or you're trading on your own. Now, speaking of tomorrow morning, let's make sure we double check, right, that schedule, because again, we get a lot of this is the biggest news of the week. It's definitely the biggest news of the week, possibly the biggest news of the month is that CPI report tomorrow at 8:30 Eastern time. There are three things that come to mind ahead of this big news report tomorrow. Is one, if the price action is nasty overnight, don't force trades overnight, right? We saw some kind of nasty, choppy price action throughout the day today, and that was because of this anticipation of tomorrow's, CPI report, right? Nobody cares the jobless claims report tomorrow. It's all about CPI report. So first of all, if it's choppy and slow overnight, don't force trades, right? Wait for better personality, and it may not come until after we get that CPI report. Now, I don't know what's going to happen overnight, right? But if you're getting good personality, if things are moving well, then trade it. But if it's not, you know what they're waiting for, right? That's the first thing. Don't force bad personality trades overnight. Next thing for tomorrow, like I mentioned earlier, you want to be prepared for some strong trends and some ranges. And so we'll definitely talk about that tonight as we get into the charts. The third thing is save your bullets tomorrow. This is a very big and very highly anticipated number. It may surprise a lot of people. It may not. We may not get very easy price action immediately after that CPI report. So stay patient, wait for nice clean setups. Obviously, we'll talk about my favorites tonight, but save your bullets, because anytime we have a big news day, we always want to save our ammunition for the following day. I'm not saying we're not going to get good trades tomorrow, because there's a very good chance we're going to find some great trades tomorrow in our trade room. But if things get difficult, don't force trades tomorrow, because oftentimes that day after, right, we call these these reaction days, the day after FOMC, the day after non-farm payrolls, the day after one of the biggest news reports of the month, right? So again, don't force trades overnight. Make sure you stay patient tomorrow or after that news comes out for the good stuff. And again, be ready for trends and strong trends and ranges as we go into the charts here and the market reacts to that CPI report tomorrow. All right, so that's the big news here for tomorrow. Don't forget, we do also have Twitter earnings tomorrow afternoon, right? As you can imagine, it's probably going to be a big deal. If you're trading the Nasdaq, be aware of that. After the close tomorrow, we're going to hear from Twitter. So careful tomorrow afternoon as well. And then again, we'll come back tomorrow night and we'll talk about the game plan for Reaction Friday. So make sure you come back and see me tomorrow night on tomorrow night's video. All right, let's get back to the action though here. Charts are all ready. S&P, Nasdaq, oil. S&P and the Nasdaq are pretty similar. They're both pretty strong trends today. And of course, the crude oil is not nasty, but it's range bound, right? So let's grab the S&P first, like always, right? We'll jump into the S&P. And what's the most important factor right now on this S&P? This is, in a nutshell, it's a spike in channel. That's basically what this chart is, right? It's a spike in channel. Now, spike in channels are notorious for two things. One is a deep pullback into the base of that channel, right? Deep pullback into the base of that channel. That's the most common denominator or common component or common personality trait of a spike in channel, right? The market spikes up, okay, and then goes into that somewhat narrow, grindy channel there. All right, that's I think one of the most important clues on this chart. The second thing that spike in channels are known for is going sideways, right? So what happens is they spike up, the market grinds and grinds, and eventually they run out of buyers. They run into major resistance, and we start going sideways, right? So we definitely do want to anticipate there being a potential range here at some point tomorrow. Now, I also think it's very important to keep in mind too where we are right now, right? We're all the way up around that 86, right? This was that big top that we talked about in last night's video, right? We talked about how last night, if we could crack through these highs, we'd be looking to go up to that 85, 86 area, and that's exactly where we are right now. If the buyers can keep this going, their next stop here now is pretty much up around that 4606, that 4610, right, kind of range up there around that big round number. That's the next big milestone. From there, it's a pretty big jump up to that big range up there, right? So I would imagine this area, right, that 4606 area, 4610 area, is definitely going to be probably the next objective for the buyers, right? If the sellers get their way tomorrow, they want to end up all the way back down to that prior high that we talked about in last night's video. All right, so the buyers want to get up to that 4606. Sellers would love to take this thing all the way back down, right, to basically where the overnight market began here. So we know these types of environments are ripe for deep pullbacks. That's one of the obvious things about this chart, right? The market broke out higher overnight, and really for the most part never pulled back. Obviously it did on a faster time frame, but there wasn't really any sharp pullback. The Nasdaq got a sharp pullback early in the session. The S&P was pretty sturdy though the entire session. So you have to think a lot of buyers would love to sink their teeth into something that can get their hands on here on a relatively deep pullback. So let's talk about how to trade pullbacks. Let's talk about ranges. Let's talk about how we can trade this thing. Remember, we are not in the prediction business as traders. We are in the reaction business. We wait for the market to do its thing, and we react and take trades accordingly. So we're likely to see a pullback here at some point. As we pull back right now, again, we're anticipating a relatively deep pullback. When I think of a deep pullback, there are two types of pullbacks that come to mind. And we talked a bit about this last night, actually. There are two types of pullbacks that come to mind. One is going to be what we call a two-try failure. Right, we get a nice steep pullback. The bears come in, they try to sell it a couple times. I do want to see them try twice because the pullback will be relatively strong here. And at that point now, all those stops are going to be right above those highs, right? Remember, very big move higher. Buyers are starving for something, right? They're starving for something to get a nice deep pullback right now. And if they can get that nice deep pullback, let's trap in those bears, right? Rope in those stops and look for that push going right back up to retest the high. Now, remember, if you get these deep pullbacks, oftentimes the market will snap back up and you'll get one more re-entry or add-on entry, depends how you manage the trade, right off that trap. So again, we call these two try failures. Pretty simple idea, right? Bears try twice on the pullback. We buy into those stop losses, and then as it runs higher, I like to grab that trap. There's oftentimes, too, a little channel that you can draw off that high, off that low, and grab that channel as well. Those are two really easy ways to buy it on a two-try failure. Now, another very common scenario in a deep pullback is we call a two-legged pullback. And a two-legged pullback's pretty simple idea, right? It's got two legs to it. It's got one leg comes over, okay, and it's got two legs on it. Now, with this type of situation, what you want is you want to try to use that trend line. I'd still like to get that 1, 2, but I like to use that trend line now. So just kind of keep your eyes on that trend line as it comes down overhead, right? Does that make sense? Right. So again, if it kind of rolls up and then over, simply draw that trend line and then try to get in off of that trend line. Sometimes these trend lines are tricky. Sometimes these trend lines are pretty flat, and so they really create a big problem for you, right? So you want to watch those trend lines as you come down off that high, right? So basically a two-legged pullback, or in this case, it's kind of a somewhat of a variation of that two-try failure, and then again into that same trap pattern. Now, here's something that you want to think about as the market goes lower. The minute this thing starts to grind down, right? The minute it starts to grind down, okay? Now look at the difference here. One of them will pull back, and the bears will try a couple times here. Okay, these are usually going to have a higher low to them. The minute this thing pulls back and starts to grind down, okay, that's usually a sign this thing is turned. What you want to do in that situation is mark up that low, mark up that big high, right? All the way back at the big high here, right? And then grab that first test off the high of that channel, all right? Now, the test off the high of that channel, we're not going to blindly sell off the high of that channel. Inside the free trading course, right? Inside that quick start course that you guys have taken, right? Could be a trap setup, could be a failure setup, could be a pullback combination, right? Now, I'm not going to go over all those right now. I know a lot of you guys have. By the way, if you haven't taken that free trading course yet, if you haven't learned all the entry signals yet, right, I'll put a little link up there for you in the upper right-hand corner. I'll tell you, if you're sick and tired of missing the best trade of the day, if you're taking too many losses, or if you just want a simple roadmap to follow, like we use in our trade room, I'll put up a little button up there for you. Grab that link, get registered for the free course. That way, you'll know that when this thing starts to grind down like this, right? Remember, once you start seeing it grind lower like that, grab that channel, find those prior swings, use those prior swings for traps, right? Get above the moving average. We're above the moving average. Buyers come in, try to buy it. We sell into their stops with failures. Failures turn into pullbacks, and you'll see a lot of examples of these. You'll learn all the rules for these, right, inside that free trading course linked up in the upper right-hand corner, right? So make sure you grab that. That's one way to sell it. Now, let's say they pull back, and let's say now they jump off the moving average, right? They jump off the moving average, all right? I'm not talking about a little thing like this, right? They really jump off that moving average now. We call these 1, 2, 3 reversals. If we get that 1, 2, 3 reversal, now we do is we find a new trend line off that low. We bring it right up at that high. We drill down to our faster time frame, and we want that first test, right? Again, it's a trap. It's a failure. It's a pullback setup. Okay, you'll learn more details of that in that free trading course, and we'll know more tomorrow once we get down there. Where's my target on that short? Where's my target? Remember this, the first leg and that third leg are oftentimes identical. Not always, right? Every once in a while, a real strong trend, it'll be the second and third leg. But I'll tell you right now, 95% of the time, it's that first leg, right, and that third leg, that'll give you a really fine-tuned exit, all right, on that final target. right? So as the market pulls back, again, do we pull back sharp, trap in those bears, or do we pull back and then start to grind, or do we jump, right? That's the key there. Now, what if we go sideways? We really want to make sure we're prepared for a sideways range up here. All right. Anytime we see a trading range with a bull bias, like this one, what you want to think of is you want to think of two basic ways to trade it. First one is you want to get underneath the range. Now, obviously, I don't know where this range is yet. It might be higher, might be a little bit lower. I don't know exactly where it's going to be yet. It's pretty likely, though, unless we get that deep pullback, because of this very kind of grindy pop higher, very likely we see a range here. Now, when it comes to ranges, what you want to do is you want to find levels of support, like trend lines, okay, like swing lines. We'll talk more about those tomorrow in the trade room. Find levels of support below that range, okay, and then what you want to do is get down to those areas of support, and then look for ways to trap in this case, the breakout sellers, right? So as we go lower, wait for the bears now to come in. Let them try to get short off the moving average. Once they do, now you got them, right? Now you know where all their pain is. Now you know where all their stops are. It's really, really important, because the easiest money you're ever going to make in a range market is going to be to trap in those breakout sellers and then literally buying right into their stop losses, all right? So wait for those bears to get in, find their stops, and we're buying into those stop losses. Now, I'm not done yet, all right? We're not done yet. Now, trade the rotation. What do I mean by that? Well, the market wants to go two places. It wants to get to the other side of the range, and then it wants to complete a pendulum swing. Okay, you'll see some pendulum swings on the oil chart once we get a little bit deeper into this video. Okay, the amount we go below the range is oftentimes the amount we go above the range. So that's going to be your final target. Okay, where I'm getting at with this is you want to go out now, find that new channel right off those highs, and grab that again. First test is the best test. Okay, these are usually traps. Okay, almost always going to be a trap right there. And again, you'll learn about what traps mean and how to trade them and when to avoid them, most importantly, in that trading course I mentioned earlier. Okay? So again, there's two ways that you want to trade a range. One, you want to buy failures underneath that range, rope in those bears. Two, on the way back to the other side of that trading range, grab that channel and hit them again, right? Failure, and then again, first test is the best test off that channel. All right, and now you know kind of where that objective will be as we go. Now, on the sell side on this, right? On the sell side on this, let's say for example, the market goes lower, right? Runs higher. We get that reversal going up, right? We take out the pendulum swing. Okay, we call that. Now, can I sell off the high? Absolutely you can. Because ranges act like magnets. Okay, so we can buy that failure, that pullback, and then once we get up into that pendulum swing, what I always do is I always use those two try failures. Let the buyers try once, let the buyers try twice, and hit them right back down into that trading range. All right, so if it goes sideways, these are the three types of setups I'm watching for, right? Failure pattern below, again, maybe a trap or a pullback off that channel, and then shorten off that high once we reach that pendulum on the other side. Oftentimes, it'll be some trend lines up here, and you'll really be able to find some levels of resistance up overhead. Remember, though, if you're trying to short a bull market like this, even though the range is a magnet, you're still going to be careful. Use that two-try failure. Okay? That's the way you want to trade it. Now, like I mentioned before, we should definitely be ready for a breakout. We should definitely be ready for a relatively strong trend. We should, because again, there's some big news tomorrow. When it comes to breakouts, right? When it comes to breakouts, kind of going higher here, there are a couple different possibilities, right? One, of course, will be that will basically be that 1, 2, 3 breakout. Right? 1, 2, 3 breakout. We open up, we pop up, we hold the pullback, and we jump. once we find those 1, 2, 3 breakouts, now we mark up that new channel. We drill down to our faster time frames and we find the entries off of that low, right? A lot of times these entries are going to look like this. We go 1, 2, 3 and rip higher like that. We don't chase after it, right? We don't chase after it. Mark up that high, mark up that low. Think about those prior swings. Get underneath those prior swings. Get underneath the moving average, trap setup, failure setup, pullback combination, right? Trap, failure, pullback combination, strength move. You'll learn those inside the trading class I mentioned earlier. All right, guys? And again, where's my target going to be? Where's my target? Size of the first leg, size of the third leg, right? Keep that in the back of your mind tomorrow. Or, of course, I'll make sure you know what to do tomorrow in the trade room. Now, is it possible that we might see a 1, 2, 3 breakout? We get that channel, right? We buy that pullback. They retest the high, right? They retest the high. And then you got it. 1 try for the bulls, 2 try for the bulls, failure, back down in. New channel off that low. Find that channel high. Hit that first test, right? Think about how this scenario works, right? 1, 2, 3 breakout. We buy that first test, right? It's a trap. It's a failure. It's a pullback combo. Okay, again, I'm not going to go into all the details here tonight, right? We then retest that high because it's almost a guarantee with that 1, 2, 3 breakout. We retest the high. The buyers start to struggle. The buyers try once. The buyers try twice. All their stops now are sitting right here, right? We sell into those stop losses. 2 try failure. The price rolls over now. Momentum turns. We find that new channel, right? We drill down. Again, this is a 7,000 tick chart. Too slow to trade off of, right? We drill down and we sell that first test off the high of that channel. All right? Where's my target at that point? If we get that short, where's my target? Oh, baby, all the way back down here. Juicy range, right? Juicy range, big magnet down there as well. All right, guys, there are a lot of other variations of this breakout. So let's talk about that in the Nasdaq. All right, we'll cover some more in the Nasdaq here. I don't want to spend the whole time here on the S&P, but we'll cover more breakout patterns. So there's a lot more breakouts that we can look for here. But now I get a pretty good roadmap here on the S&P. Let's keep going though. Right, let's grab some Nasdaq. Nasdaq is very similar, right? Nasdaq very, very similar here to the S&P. As we mentioned last night on the video, this was resistance here last night, right? That was a big resistance area. As we said, right? If they can break through this area, that 15,000 was probably going to be a pretty easy objective from there. And you can definitely see they got that 15,000, right, and some change on this. I think it's pretty interesting though how you've got that big leg up overnight, right? That then leads to a measured move. Measured moves in trending markets are major objectives, major areas of resistance. So that is interesting of how it lines up with the range. Right? Now, whenever we see a range breakout, we take the breakout leg, and that creates the measuring leg. So as you can see, there's no shortage of resistance up here right now. Now, we're very bullish. You can definitely see that, right? You can definitely see we're very bullish here right now. This is not as obvious of a spike in channel, is it, as the S&P was. This is more of a spike up into a range, right? We rope in the bears below the trading range and buy it back up. If you look closely at this, you can see, right? You can see that failure into that pullback that we mentioned earlier, right? That pendulum swing there. You can see that sequence that we talked about on the S&P here. All right. So really at this point, again, it's a very bull market right now. The buyers, right? Buyers would love to buy a nice deep pullback. Right? Sellers would love to sell a reversal off the high, right? Go all the way back down to that low, much like the S&P would. If we can keep on going, the next objective overhead, probably that 15,259, call it 15,260. That'll be our big top. I can't recall how long ago that top was. When was it? Yeah, back second day of February, right? So early February, that was that big top up there, right? That 15,259, right? So we think that's where the buyers want to go if this thing keeps on going. If the bears get control of this, if the bears take control, they would love to go right back down again to where the day began. Basically, turn right back around and go right back down again. I got a pretty good idea of where these buyers and sellers want to get to. A lot of this is very similar. Again, if we get a deep pullback right now, and I do want a deep pullback, I'll use that one, that two try failure, and then look to grab that trap as we go back up to retest that high, right? The objective is a retest. Rope in those bears, use that failure, grab that trap. If you get lucky and you grab a channel, definitely take that trade, right? Great trade there, all right? Or if we start to pull back, right, and the market starts to roll over, got that range below us. Yeah, mark up those lows, mark up that big high, find those prior swings, get above those prior swings, you got it. Trap set up, failure set up, pullback combination, right? Back down we go. Where's my target on this? First leg, third leg. That'll give you a nice, kind of optimized final target for us as we go lower. Or maybe they simply pull back. Maybe we end up jumping off the moving average. And as we jump off the EMA, now we get that 1, 2, 3 reversal. We mark up that channel. We find those traps, right? And we, of course, find the sequence of entries you learn about in that trading course, right? Off the high of that channel. All right, guys? So again, watching the pullback, if the pullback turns to a reversal, we trade the reversal. We're not really in the business of predicting, right? We're waiting here to see what the market wants to give to us. Now, could I take a short off the high? Absolutely, right? Absolutely. As we mentioned in the S&P, let's say we get that pullback, right? Let's say we get that nice deep pullback, we get that 2-try failure, we snap back up, and we retest the high. Now, use that 2-try rule, right? Let the buyers now try once, try twice. Where are their stops, right? Where's their pain? Where would the buyers be getting stopped out? Where would you be getting stopped out if you were a buyer up there, right? Think about where that place is and then get short right into those stop losses. Again, we're going against the trend here, right? We're going against the trend here. So it's important that we let those buyers try twice. Give them the benefit of the doubt. Once we get that reversal, then remember, your job ain't done yet. Find that new channel and grab that first test off the high. Okay? So again, 2-try failure, or as we call them, crown reversals. And then, of course, trap, pullback, right? Failure set up off the high of that channel. And then we know where the target is at that point, right? That big juicy range below us makes for a pretty easy target, right? This first leg, second leg will oftentimes be symmetrical. Don't be surprised though if this thing really runs. I would definitely try to leave a portion of that trade open there because it could really push, once those buyers are caught in the wrong side. All right, so buying the pullbacks, selling off the highs. It's a beautiful thing when it all comes together here. We may see it go range bound. Again, much like the S&P, if we do find ourselves going sideways here, what do? And we find levels of support, right? We find support levels underneath that trading range. We get underneath it. We rope in. Now remember, if we go sideways in a range, that range becomes the magnet. We don't necessarily need as deep of a pullback anymore. Today was a good example over here, right? Big strong push up. That trading range says we're looking for failures right below that range low. We don't really need a very deep pullback if we can go sideways, into a trading range. Okay, so remember those kind of 3 ways to trade this, right? Remember this sequence we talked about on the S&P. Okay, we go sideways here, we pull back, we rope in those bears, right? Get that seller failure pattern. You'll see a lot of examples of this sequence in that free trading class that I mentioned earlier. You'll see a lot of those examples there, right? So again, it's a failure. We then grab that first test off that new channel. Okay, where's the objective? The objective is to go to the other side of that trading range, and it's the pendulum swing, right? So again, we break, right? We break down, trap in those bears, grab that first pullback. Again, I say pullback, but it's not usually a pullback, right? It's a trap setup, a failure setup, because of course we're doing a faster time frame. This is a 4,000 tick chart, right? We'll drill down to our faster time frame. You'll learn that stuff inside the course. Okay, so we've got that pullback off that channel, failure, right? First test is the best test. Now we run higher. We take out that pendulum swing. Now, can we short the top? We definitely can, but you got to wait for what? Wait for exhaustion. Wait for the buyers to try a couple times, twice to be specific, and then hit them right where it hurts, right? Now, do it again, right? Find that new channel off that high. Is it making sense? Is this making sense? If this is making sense, if we're getting light bulb moments going off right now, give me a thumbs up and give me a hashtag light bulb moment, right? Or, hashtag this makes sense, all right? Let me know if this is making sense. This sequence happens over and over and over again. That's how the markets work, right? Range rotation. So we sell off the high, two-try failure because we're going against the trend, and then again we hit it. Right? I always tell my students in the trade room, sometimes we don't get a clear signal for that reversal. Okay? Sometimes you won't get it. Sometimes it'll V-top, right? It'll V-top, off the top there. Sometimes you won't get it. But you got to make sure you grab that one. You want that first channel test, right? As we call it, because you don't want to miss that pendulum on the side. And I'll tell you, these have great potential to really slingshot. We call these slingshot reversals. Right? They fail off the high, but now by the time they get all the way back down to those lows, that momentum has built so much, it just keeps on going. Right? And we'll work on that more tomorrow in the trade room. All right. Well, I think we're looking pretty good here as far as the ranges and kind of what to do here now. The breakout, right? The breakout. Now, on the S&P, we talked about, right, that 1, 2, 3 breakout sequence, right? We talked about that one. Okay, this is a very, very common. That's why I always kind of talk about that the most. Very, very common. And again, that first leg, third leg, and then again, remember, right? When you get that hit, right? 1, 2, back down again. Same sequence. Okay, that's one. Another one is that spike and grind, right? So again, we know where the market wants to go here. We know they want to get up around that, 259 area. Let's say we now spike up, right? And we grind, right? And we grind. What do? Yeah, we mark up that trend line off that high. We find that big channel, right? Find that big channel. Find the big one. Because what you're looking for is you want to see a nice deep pullback, right? Because at this point now, all the buyers are starving for something to get into. We don't want to chase it way up here. This is not the spot to be chasing it. Wait for that nice deep pullback, get underneath the moving average, trap in those bears who are trying to get short. Remember, anytime you see a big strong move in one direction, there's a bullseye right at that high, right? So trap them in, grab the trap, grab the failure, grab the pullback setup, and go back to retest the high. Then at that point now, do they double top? If they do, now 1, 2, you got it. Short that thing right off the high. Grab that new channel and hit it, right? 2-try failure into that pullback. All right. What else could we look for here for a, I don't want to get too aggressive. If it just jumps higher here, I don't want to get too aggressive because again, it's been rising pretty much all day. And so I really want to try to stay patient for that nice deep pullback, right? Get that pop up, wait for that really deep pullback. And that also might happen. We've talked about this deep pullback and trapping in those bears with a 2-try rule. That may happen too. It may jump up. We may see it pull way back, right? And then get those bears roped in 1, 2. We may get that too. Same thing. Just kind of move it up a little bit, right? Failure into that trap and go from there. Again, though, I'm not really a big fan of chasing it as it goes higher. There's usually a lot more money to make. Yeah, you can, kind of hold on tight, put your mouth guard in, your helmet on, and kind of scalp away up there. But, all you're doing is just giving your broker, his Mercedes payment, right? I'd much rather rather than scalping and just generating a bunch of commissions, I'd much rather wait for that deeper pullback, rope in those bears, right? Use their stops as fuel, easier entries that way, and a whole lot less stressful, I might add, and simply take that low risk, high reward back up to retest the high. To me, that makes a lot more sense. To your broker won't like it, right? Your broker will be like, hey, what's going on? Why aren't you trading more? Well, you're like, well, I'm more selective now, right? I'm looking for better risk reward, more meat on the bone, right, for those trades. All right, guys. So got that all covered on the breakout. Again, I don't want to get too aggressive on it if we do break higher here. The key is me waiting for that deep pullback, roping those bears in, and then again, if that pullback turns into a reversal, and the ones you want to think about are that 1, 2, 3, or that pop lower and that grind. The grind is always a great one because it takes a while, right? But you want to wait for it just to pop up and finish that move going back down again. All right, I am excited for tomorrow's CPI report. Let's finish up with oil, right? Oil is kind of the oddball out of the group, but oil probably is, I don't know, probably the easiest maybe out of all three of these. I say easy, relatively speaking. What's the most important thing on oil right now? I think the most important thing on oil is a bear market into a range. You're not going to see me use 2 days of information very often, but it kind of fits best that way. We're basically a bear market into a trading range. All right. Now, in this particular scenario, we have this really big range down here. Right. Remember this from yesterday, or last few days. Right. Look at that range. This is a huge range. Right? That is a huge range. So 8750 is a big magnet for those bears. The bears would love to get back home, right, around that 8700, right, or 87 even. Okay, where do the buyers want to go? Yeah, the buyers, look at that big run up, right? There was that kind of, when the whole Ukraine thing started to get, heated up, right? It pumped up 93.15 up there. The buyers would love to go back to those highs. Now, that seems to be a little bit much. That would be what? Almost, there's 90, so it'd be $3. So it's not unheard of. Oil will have a couple days here and there where you see $4 moves. It's not very common. Usually $2.5 are about as far as we'll go. That means that Friday close, right? 92-ish. Definitely possible for those buyers tomorrow. I would say 91, 92. That's last Friday's close. It's a very reasonable a target there for those buyers here. But this is all fine and dandy. We can kind of fantasize about these buyers and sellers. But right now, the most important thing is going to be this range. When I think of this chart right now, this is what I think about. Right? When I see a chart like this with a bear market, let me go a little bit bigger on that here, Joe. When I think of this market like this, in a bear market, here's what I think. I think about going up, obviously selling with a buyer failure, grabbing that reversal, right, with that new channel, and then trading the breakout going lower, all right? So finding that pendulum swing and then watching for that breakout going lower, right? And a lot of times these breakouts will be like that spike and grind, right? Down like that, finding that new channel and then hitting that, right? That first test. So when I think about this oil right now, I think, all right, we're bears to a range. I want to focus on what we call buyer failure patterns, right? Wait for it to pop up. Wait for the buyers to foolishly, buy the pullback. It's not a bull market right now, right? Turn off the news and trade the chart, right? If you listen to the news right now, you would think that oil, and it might go back to 90. It might. I'm not saying it can't, back to 92 tomorrow, right? But if you look at the chart right now, though, it's a bear market still, okay? So we saw off the high. Again, we grab that, right? We grab that channel. We finish off the rotation. And then because we're so bearish and because we have that juicy range, right, that big fat range down there, that's where this trade really looks very attractive. So we got a couple different options here on the oil. That's what bears would love to get. And as you can imagine, buyers have to really be careful buying down here because it's such a bear market, right? This is one of those times where you're really got to be careful buying below this range low just because, again, it's so bearish going into it. All right. So here's how I'd like to, now that you kind of know the basics of what I'm looking for here, here's kind of what you're thinking here. All right. If we go higher, let's do that kind of, we'll do the up, down, and the sideways. If we go higher here, this trend line really becomes your best friend, right? This trend line here becomes your best friend. It's probably going to be drawn like that. It'll probably be up like that, right? A little bit steeper there. So let's say, for example, we go higher. Right? We go higher. This is a relatively strong move. And if you watch my video newsletter every evening, you know that strong moves, they kind of act like magnets or objectives. So it would make a lot of sense overnight for these buyers to go up, take out that high, right? And then we can look for that short going back down in. I'll be looking for this trend line at that point to be the entry point. Right? So as we go higher here, you can, there's probably two ways to trade this. One would be to look for a trap, little tiny trap there to avoid that trend line. and then grab that breakout pullback on the other end, right? So grab that breakout pullback. So the kind of the thread, the needle entry will be a failure with a trap on it. And the reason why you want that trap is because of that rising support trend line. Traps are what you want to go after when you have those support trend lines in your way, or any support level in your way for that matter. All right. And then as we get over the top or underneath that trend line now we can grab that trend line on the other side of it. Right. And of course, it may end up being like this, right? We may go up. The buyers may come over. They may try to buy it. We roll lower. And then watch this one. Mark up that trend line off the low. Mark up that. See what I'm doing here? Yes. That would be a great short as well. Right? That's a great short as well. Okay. Now, where do the bears want to get to at that point? Yeah, they want to get all the way back down to those lows. Okay. So now what do you do? Yeah. Now we get after it, right? Now we get after it. Now all that bearishness again comes into play. We find that new channel. We find that, again, I love traps on this entry, right? Traps, failures, pullback combos for that short, right? Again, it's going to be it'll be tough to see ahead of time, obviously, what that failure looks like. But again, trading off that trend line, grabbing that channel, okay, as we go, and then again, leaving that target down at that low, right? We go up, we fail, we rotate, we roll lower, and now they don't stop at that low, right? Now they keep on grinding, right? You know what to do with this now, okay? Don't go looking for big channels here. Don't waste your time on that, okay? This thing's in free fall. So mark up that low, find that big channel top, yep. And again, I like this short because of the overall direction and that range below us. The range below us is a big reason why I like this follow-up short, right? So we're selling off the high, we're selling that channel, right? And we're selling that new, again, kind of that breakdown and that first test off that channel, right? I love that sequence. I love that sequence. So be looking for that tomorrow in the trade room. Now, as we go higher, how do we buy this? How do we buy this? I'm going to warn you right now. 91 is a really big area right here. And we talked about this last night. We talked about this whole area last night, right? 91 is a really big area. We'll call it 90, 93, okay? So do not be surprised if we go up, we overshoot that high. 1, 2, there's that failure. Don't be surprised if it goes up and fools everybody off that high. All right. Now, if we can go up and hold that pullback and go, now we're talking, right? Now we're talking there for the bulls. So if I can go out here now, if again, we go up, 1, 2, back down, to that already. If we go up, right, take a 91 out. We go up, we hold that pullback, and we blast. What do we call those? We call those 1, 2, 3, in this case, reversals. 1, 2, 3 breakouts. I am not going to take that first pullback. It's just not. It's not the trade that's consistent enough. Well, look, you want that one? You want that one? Take that pullback, right? It's basically the same thing. It's basically the same idea. All right. So I'm not going to grab the first one, right? That's the one you want to sell back down in again. But we can mark up that high, mark up that low. We're drilling down to our faster time frame. We're finding our two-legged pullbacks, our failures, our traps, our pullback combinations. And again, if I'm talking different language right now, you'll learn all the terminology in that free trading course I mentioned earlier. All right. It could be a 1, 2, 3 breakout. It could be a pop and a grind. Absolutely will be possible. Right. Find that channel, get that little trap, that failure, that pullback, and we go. All right. Where do we think the market wants to go if we can get this thing to reverse, go higher here? Again, 92 is a pretty logical spot for it. If they really pump this thing up, that 92.50 area. I doubt we go $4 tomorrow, but hey, you know where they really want to get to, right? They really want to get that big top up there. All right. Also, too, don't be surprised if we get some news here, tomorrow morning, the market pops up and gets stuck up here, okay, in a new range. Okay, that's a bull market into a trading range. The range becomes the new magnet. Okay, we know how to trade this, right? We wait for that failure. We grab the turn. We trade the pendulum. Yeah, same idea, right? Same sequence. So execute that strategy if we pop up with that news and hold up there. right? And hold up there. Okay, don't be surprised though. Don't be surprised though if we pop up, we get that range, right? The buyers come in, they buy it, they pop it up, and then all of a sudden 1, 2, and then see ya, slingshot right back down again. That is definitely a possibility. So you'll be able to put together all the different components we talked about tonight already. And again, I know I'm covering a lot right now, right? So don't forget, tomorrow morning, 8 o'clock Eastern time in our trade room. I'll put the membership information you guys need. If you're on YouTube right now, it'll be in the script in the description, right, of the of the video. All right. Now, as we go lower, I'm not a big fan of being a buyer down here. All right. Like I mentioned earlier, I'm looking for those 1, 2, 3 breakdowns. I'm looking for that breakout, right, as we go lower. Right. I'm looking for that 1, 2, 3 breakout and then grabbing that first test off the high of that channel. The only way I would want to buy down here would be if they took out that low, if they retested that low, and then we get that 1, 2, back up we go. Okay? That's going to happen, right? So for example, right, like back here, had that big move down, let them retest the low, 1, 2, back up in. Okay? So I'm definitely, I realize that the range is a magnet, and I realize there's support down here. But it's such a bear market overall in that big range down there. So they got to take out that low, complete the pendulum swing, get that retest, and then let's rope in those bears with that 2-try failure. And then we can go out, we can grab that new channel, all right, and we can hit it off that low, right? 2-try failure into that first test is the best test. All right, guys, I have covered a lot in this video. I appreciate you tuning in and sticking around all the way to the end. I think I've covered a lot of the situations for tomorrow. I'm sure I've missed a couple of them. I'm sure we'll get some sort of curveball tomorrow morning at the opening bell. So that's exactly why our trade room is the best place to learn and earn. If you're sick and tired of missing the best trade of the day, if you're sick and tired of taking losses and making mental mistakes, our trade room is a great place to come out and trade with me each day. I teach it. We trade it together. It's just a fantastic place to do it in a safe environment. What I'll do is I'll put all the membership details, I'll put all that stuff in the description of this video, so definitely grab that. I hope by now you've grabbed that free trading course because you'll learn a lot more details and you'll see a lot more examples of these setups, right, in that free trading course. And keep in touch, right? Keep in touch. If you have any questions, hit me up in the comments section below. You can always call the office, right? I'll be always here to help out with any questions that you might have along the way. All right, guys, now get some rest. Enjoy the rest of your evening. I'll see you tomorrow morning, 8 o'clock Eastern time in our trade room. If I don't see you tomorrow morning at the opening bell, trading that inflation number, I will see you guys same time, same place tomorrow night, and we'll get ready for Reaction Friday. Guys, my name is Joseph. Thanks for being here. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.